Okay, hello and welcome to today's event. I'm Jason Gumpert from MS Dynamics World, and we are here today for a new look at revenue management in the new Dynamics AX. I'm joined by Rahul Moda of Real Dynamics. Rahul and his colleagues at Real Dynamics have become good friends of us at MSDW. They've written and contributed articles, and they've been doing educational events, and it's great to have Rahul back today. So as we get started, please know that you can add your feedback and ask questions during today's event. I know Rahul will be making time for those. Use the Q&A block that you should see to the right of the main presentation window and enter those at any time. So without further delay, please allow me to welcome Rahul to get things started.
Paul, thank you for joining again. Start by sharing the screen. Okay, a brief about me. I'm an advisor and trainer for Microsoft Dynamics AX, helping customers and partners in realizing the investment on AX. So overall, 16 years into ERP consulting, and of which 11 years has been into Microsoft Dynamics AX. And as Jason mentioned, among the co-founders of Real Dynamics, which is an advisory company for focusing on Dynamics AX and business intelligence. From the agenda perspective, what you should expect from today's session. So we'll be exploring the different revenue management possibilities that's available in the new Microsoft Dynamics AX, which is 7.0 earlier call. And two-part series. Today's part will be complete by itself. So we'll be looking in details about how do revenue recognition options are possible in projects, a business scenario, and see how do we map it in solution into the new AX, and also see how different revenue recognition principles can be left. Looking at the big picture, which is very important from an envisioning perspective as to how the solution financials look like, and typically into the T accounts format. So this to lay down the foundation for the session. And the part two will be doing an actual demonstration in the new Dynamics AX. And then we will give substantial enough time for the Q&A towards the end. We'll start with the various revenue management possibilities. Now, the first option, and which is the most common one, a lot of end customers are using, which is using the sales order. Typically, your invoicing and revenue happens at the same time. There are ISV solutions who do manage the deferral, but out of box, what you get is you invoice the goods, and the billing is done as well as the revenue is also impacted. It does give an aspect to do a deferred revenue, which is only possible when you ship the goods, not really invoice it, but nevertheless doesn't account for the actual deferral of the revenue and then the recognition across different time periods, which is needed by US GAAP, by IFRS, and other accounting standards. So in essence, it's just meant to do like a one-time billing. The transaction of the sale order is done. You can raise one or many invoices, but then that's the life cycle of the order and the process. On the other hand, which is doing the customer billing, you can use projects. And for the projects, the two end customer facing billing projects are your fixed price and the time and material one. Now for fixed price, which is primarily the billing is based on the on-account schedule that is prepared. And then the fixed price gives a number of options to do revenue recognitions, wherein your revenue is not connected to your cost, but based on the percentage complete or based on a particular principle, accounting rule, it's recognized. This is what we are going to see in detail in today's session as to how to do different revenue recognition on the fixed price project. The whole idea of this slide is to ensure that all the different options are explored. The other common billing perspective that or a project type that's used is a time and material project, and it's primarily intended to do all of your actuals billing. So actuals in terms of the hours that has been reported onto the project, or the expenses, or even the items, and to an extent even the sale orders. Now do remember, projects give a flexibility of billing not just to one customer on a single contract, but multiple customers as well, which is not possible on the sale order. So that's where projects module is a key instrument in doing billing and revenue recognition, where a deal has to be managed in terms of a contract and multiple customer stakeholders are involved into it. The other aspect of using the revenue management is using the subscription, and it is used in conjunction with the time and material project. So subscription fees along with time and material project, this subscription thing is the modern world billing thing. Imagine your app purchase, your telephone bill payment, or even utilities payment. You may pay it upfront. The revenue is not recognized immediately. It's recognized as and when the services are consumed. Series to the session, which we will be doing next month. That's where we will go into details of how the subscription revenue and it's done. But we will focus completely on to the fixed price project and what all different options are possible. I'll take the different principles of revenue recognition and fixed price project. Being no WIP, which is the work in progress. So as soon as you bill to the client using the on-account schedule, the revenue is recognized instantly. So you debit your customer and you credit the revenue P&L account, then itself, without doing any separation between invoicing and revenue recognition. However, the remaining approaches, which is the next one, which is and also the most frequently used, is the percentage complete principle. So this is where the invoicing and the revenue recognition are separated from each other. So invoicing is for the milestones. So based on the milestones schedule that's prepared, you will keep on billing to your end customer. The customer will be debited and your WIP account will be credited, and that will be settled later on. This revenue recognition is done periodically. So that periodically it could be done, or it could be based on a quarterly. From a timing perspective as to how much amount the revenue can be recognized is typically going to come from the percentage complete. Percentage complete completion can be leveraged. You can take the total cost on the project and get the that has been consumed. That way you'll know how much remaining cost is there or cost to complete is there, and use that as a basis to suggest a percentage completion factor to you. The approach 2 is, in case if you don't want system to give you like a calculated percentage completion, then it can be suggested by a human being. Provide that into the system and use that percentage factor to renew. So in this case, if you say X percent, it will be X percent of your total that will recognize at that particular period. This is among the most frequently and common used principles. Accounting rules, certain industries, certain business situations may warrant you to recognize the revenue contract is completed. So which is leverage during the third option, which is completed contract principle. The same thing happens. Your billing or your invoicing is done as per your milestones. However, you recognize revenue only towards the end. So until you say your project is 100% done, there is no revenue recognition that's happening. Now, other options, how the revenue recognition can be done. One of them is straight line principle, and this is getting more popularity day by day, which is recognize revenue on a time scale and distribute it on a scale fashion based on the number of days in the period. So for example, if you have, on billing thing and then based on the total contract value, you want to recognize revenue based on every month, then the straight line principle is leveraged. Came in AX 2012 R3 CU8 onwards, so it's fairly new from a solution perspective. The same goes with the other principle, which is the WBS progress principle, and this is the same. Your billing and invoicing is separated based on your milestone. However, your recognition is happening based on how much the work breakdown structure is reflected as completed. So typically, if you want project managers managing the work breakdown structure and use that as a basis to recognize revenue, then the WBS progress principle is option to use. Keeping in mind all 5 principles, we'll be exploring all of those 5 and one of them in detail, which is the percentage complete principle. Now let's do with how does a typical business scenario comes in, and how do we map into AX and then recognize revenue. Proposed over here is which is represented in the table on the left side, and it is showing across the different dates, the different milestones. So imagine it's the implementation of new Microsoft Dynamics AX. So overall, envisioning it to be like $1 million project contract, and on July 20th, based on the contract signing, 10% will be billed to the customer. Remember, this is only billing aspect. This is not connected with the invoice recognition. On different dates, based on the different activities and the milestones being delivered and achieved, and the percentage agreed with the customer, an X percentage is charged to the customer. So that keeps ensuring that your accounts receivable and is up to date. Now, this will start, the project will start on July 20th and it will end on December 20th when the go live will happen. In real life, you may have a support phase or stabilization, but from a scenario perspective, keeping it simple, just for 6 months. Now, in this, we are only billing based on the amount that's mentioned in the table. The way we would like to recognize revenue, and this is a human decision factor, or it could be system driven. We are saying we will recognize 40% of the revenue when we third quarter end or ending of September. So it will be 40% of $1 million. So $400,000 is what we will recognize in the month of September. We will recognize the remaining 60% when the whole contract ends. There are 2 options. One, the human decision or the decision based on the system, or a proposal made by the system based on the actuals and the overall forecasted. This business scenario, how it will look like from an overall big picture, then we will lay it down on a T accounting format. This is what the basis of recognition rule on percent complete. So where we are saying the on account invoicing, and this will happen for different milestones that we are doing. Will be debited, it will be a balance sheet AR entry. On your credit side, it will be the project WIP with invoice on account. So that's the posting type that you will see in the general ledger on the voucher. Typically, you may use a balance sheet account, which is a deferred revenue account. In situations where you may use it, but essentially you are trying to not recognize revenue, and that's where we are posting it to a deferred revenue account. So from 1 to the 6th milestone, which we have in our business scenario, we will keep on invoicing based on the agreed date. This left-hand side will ensure the invoicing is happening. The revenue is posting to the deferred account. The revenue is recognized on the fixed price project is through the estimate posting, with the exception of no WIP. When it is percent complete, and we will say it is, let's say 40% complete, what the system will do is it will post credit to the project accrued revenue. This is your actual P&L account for the revenue. It will post that 400,000 over a year, and then it will debit it from the deferred revenue that was posted during the invoicing time.
Hey, Rahul.
Yep.
Sorry to interrupt. Your audio is starting to break down a little bit. I think it's a bandwidth issue. Could we just pause here and have you dial in?
Sure, can do that.
Okay.
Okay.
You may need to stop your desktop sharing.
Okay, no problem. We were at the estimate posting, which is the time where we were recognizing revenue, and the posting type is typically we will get estimate posting for the X percentage of the percent complete. We will get a credit to our project accrued revenue, which is the actual revenue account, and our project WIP, which was the deferred revenue, will get debited for the same amount. It will happen every time, every periodic frequency, we will recognize revenue based on percentage. After everything has been recognized, there is a step in the estimation process, which is called elimination. So that will ensure anything that is outstanding on the two account types, which is the project WIP invoice on account and the project WIP sales value, those will get settled as well. Now, in the example, I've given the same account, WIP invoice on account, the deferred account, and when we were recognizing revenue, when it was posting the debit, it was posting to project WIP sales value, also gave the same account. So that way it will be just a flush entry at the end. So with that, that's the laying down the foundation for the entire options of revenue management and specifically focusing on the fixed price project. So with that, I'll move to the new Dynamics AX and walk you through certain options and different principles that are available to us. The box over here, we'll just straight away go to the all projects. I've already pre-created the projects of different types, so we'll quickly leverage that and do check one of the principles in detail. So projects on the top, and we have different combinations. So there is like a completed percentage, there is an option for no WIP, there is an option for completed contract, and all of these are coming essentially from the project group. That's where this revenue recognition principle is derived. So let's review the project group for completed percentage. The key setup over here is, this is the project group. Within the estimate section, you will see something as fixed price and revenue recognition accounting rule. So this is the place where when you are creating a new project group, you have the ability to specify what principle we want to use. So this one is completed percentage, and then we will assign the matching principle as sales value. This is where the estimation elimination will also take care of. And within the cost template, we will recognize which all different categories we will leverage. And in the period code, so this is where we will say which periodic frequency we will be running the estimation. It may or may not mean there is a change in the percentage complete, but then we can certainly run that, and which is very, very helpful when we want to run the project P&L statements. Key, all the accounts that we saw in the T accounts, all those posting type are already pre-created in the ledger posting setup, which is given through the project group, or you can do it from the main form as well. Structure we have for our example of the percent complete. Straight away go to the on account transaction. So this is the place where we define our milestone schedule. List down everything from the date wise, description of the milestone and the amount that is there. It doesn't show you the total value. You can certainly keep the total value on the project contract, But this is the behind the scene. This is what the system will aggregate and will use as the total basis to recognize the revenue based on the percent. So there are different. On July 20th, there is a contract sign off $100,000. Invoice status is important. So when we are creating, it is in chargeable status. So far, what I've done is I have already used section to invoice. Let's invoice one more, which is for the design completion. So just imagine we are at September 20th, and then we will recognize, or we will bill to the customer $150,000. Let's do that. This will update the status to invoices as well. Let's run our proposal. We should get our on account transaction September over there. Just give the project that for, let's give the end date, or if you don't want end date, we want to see everything, we'll just clear out the end date. Then you will see all of the milestones. Scroll down, so we can scroll to the right to see the description and the amount. There you go. We wanted only the first one, which is the design completion, to be billed to the customer, and rest all others we don't want to bill it now. So we'll just unselect the other one. The total invoice amount is $150,000 that we want to bill. Now we do get a summary screen of the invoice proposal. It will show us so far whatever we have invoiced. So we have invoiced $350,000 so far. This invoice proposal is going to invoice another $150,000. The basis of invoicing is on account. This will automatically show up different tabs based on different projects and different billing mechanism. So if it's a time and material project and we are using, let's say, hours for billing, it will show the hours tab and the details of the hours that you want to bill. So not all on account transactions are billable. That's the whole purpose of creating it. So that's where it's showing up in the invoice proposal. Now we'll just go ahead and post it and verify our voucher. So what we should expect in the voucher is what we saw in our T accounts as well. Let's go ahead and post it without printing it. All right, it's fast. And let's go to the invoice and let's verify the voucher as well. So I'm clicking on the invoice on the project and then clicking on the voucher. Accounts receivable for the customer, the AR account is debited for $150,000. And because we are using revenue recognition principle as the completed percentage, the is posted to the WIP invoice on account. Now posted to the deferred revenue account, and this is where we will see it will be relieved when we are in revenue. So this is the best part of project. Your revenue recognition and invoicing are separate. They don't have time to be. Let's do the other part, which is recognizing revenue. And this is all done on the project, fixed price project, through the estimates function. And typically I will run the project statements quite frequently. We'll do that once we post the revenue. So that way we'll see that all into effect. So here we'll run a new estimate. The estimate date is important because this is what it will ensure that all the posted transactions on the project is taken up till that one. Since we have invoiced to the customer till 20th, let's run it till the end of the September. Now options, cost to complete, which is we can run it based on the cost template. So the details are defined in the cost template, or we can run it based on the total forecast minus actual. So if you are using a detailed forecast for your project, then we can certainly use that. And based on the actual cost that is posted on the project and the total cost on the project, it will arrive at the percentage complete, and then it will suggest it. posted some forecast and some cost on the project. Let's see what it gives as the percentage complete, and we can choose whether we want to use that or a human decision. The completion method is important. Manual means a human decision. Let's switch it to automatic. That way, it's a recommendation from the system. We may choose to give a forecast model, or it will take from the default. Let's run OK. So what it has done is, let's look at the cost estimate as well. So this is saying the percentage completion based on the forecast and based on the actual cost posted is 11%. So 11 plus 11.07. So it will take 11.07 of your $1 million total contract value and accordingly recognize revenue, which is called like the accrued revenue in AX, $110,000, 6.55. And that's the rounding off thing. To arrive at this 11.07, we can go to the cost estimate and see what. So $5,400 expenses that was posted as out of the total $20,000 forecast for the hours that was mentioned. So essentially, forecast for hours, there were forecast for expenses totaling up to like $48,000, out of which only $5,000 for $5,400 was posted. So it arrived at that 11 point. Now, if we are in our scenario, we said we would like to recognize 40%. Certainly not the case. You know, the cost tracking is not up to date, happening as rigorously. So then the finance and the accounting team may choose to recognize revenue based on their decision. So we'll not use this estimate, so I'll rather delete this. If I manually the percentage completion and the options which I was mentioning earlier that can be leveraged. We are selecting September end and we are saying continuous. We may choose to use the from cost template, let it arrive, but essentially by saying manual, be able to percentage complete. This, you'll notice the percent complete now becomes an editable option, and so revenue is 0 because the percent complete is 0. If I say 40, this recalculation will just change the icon, suggesting that we have to calculate this estimate again basis the new percentage given. If we do that, we'll arrive at what is the accrued revenue or the revenue that is going to be recognized. So it's taking 40% of $1 million. It's going to post $400,000 to your actual revenue account and relieving it from the deferred revenue as well. Voucher as well, that will ensure it falls in line with the T account we saw earlier. So already posted, that was pretty quick. Let's hit voucher. Our cost entry also, that's not the focus. The focus is on the revenue. So you'll see accrued revenue, which is posted to your actual revenue account, which is of type project accrued revenue sales value. That is being credited, and your WIP invoice on account, which is the same as your deferred revenue account, that is being debited for the same amount. At this point in time, for the percentage that we want to do. I mentioned, every time the information inside is important, so we should be running project statements quite frequently to be on top of the project financials. So I'm just running the project statements wide open, running it for all dates, for all different combinations, and we'll just say calculate. So running it only on actuals, but if you are maintaining thorough forecast in the system, we can definitely get a comparative deviation report as well. So there you go. It is giving a summarized statement information as well. So revenue recognized, revenue posted in P&L is $400,000. Overall cost. If we go to our WIP, it will show us that how much we had billed to the client. So in our WIP invoice on account, we had billed $500,000 so far to the customer. So that's showing 500,000 here. And since we have already recognized the $400,000 revenue, it's saying 100,000 is what is remaining net in the WIP. Certainly choose to go onto the invoice and see how much the completion is remaining. So this is going to tell us in a different view how much the on account is and on the milestone it was with. But the primary screen and most of the information is available over here in a quick snapshot. So that's from a percentage complete. We can certainly invoice the remaining on account schedules, and then once the closure date for the project comes, we can recognize the remaining percentage. This was about the completed percentage. I do want to explain and quickly run through. We'll not run post transactions, but we'll certainly validate the different posting. So let's look upon the completed contract. So this example uses similar structure. Let me show you the on account transaction. So there are different milestones for different amounts. There is amount for $11,000, $22,000, and $35,000. Everything has been invoiced. And if you look upon the estimate that was posted for it, up until it was not 100%, the accrued revenue will not show anything. But once we say done and we post the elimination entry, that's the time the revenue is recognized on a completed contract principle on a fixed price project. Again, let's review something which is a straight line recognition. So this is a fixed price straight line. For the invoicing that has been done, there has been two invoices, one for $10,000, one for $110,000. If you look upon the estimates, now straight line needs the dates, which is very important. So it certainly needs your start date, end date, and then accordingly can prepare the percentage and the schedule. So this is overall estimate. So I've ran it for every month. You will see every month, irrespective of how much has been completed, what has been posted, it's taking the total contract value, which is $120,000. And you will from January onwards till the December month, based on the number of days and based on the amount, it is suggesting how much percentage completed it is taking into factor. So this is showing your cumulative percentage completion. The best way for us to review this will be to open it in Excel. Download this and open it in Excel to see in a graphical format, because that will give a better perspective of how the revenue was recognized in a straight line principle. Let's open Excel. Should be able to quickly create a pivot. Let's do that. Let's run recommended chart. Okay, this looks fairly good. Okay, let's. Okay, not this one. Let me run through a pivot chart manually. That will get us more in control of the different options. So we want to see how much was the accrued revenue that was recognized, and we want to see that across the different period codes. So we should get our estimate date. There is the straight line mechanism, so it is suggesting that in January month it recognized so much, February had probably 28 days, so it recognized, or 29 days, so it recognized slightly less, but it's a straight line recognition. One more, which is the work breakdown structure. So on this particular project, there is, let's review under the plan, there is a work breakdown structure that's created. Now, in this,
Okay, the first parent note, there are different quarter-wise, just from a simplistic representation perspective, different quarter-wise categories and their effort and their corresponding captured. So essentially, the system is going to use the cost prices or the cost factor in the system to arrive at how much is the work breakdown structure completed percentage. Now, overall year, the effort is seen. We have the amount also, the estimates, which is through our manage option. The total value was, and I made a change subsequently, is $120,000. And running the estimate for the work breakdown structure completed percentage, it will arrive at the percentage using the actual cost that has been posted. So that's how it's showing $78,000 out of the total that was estimated on the work breakdown, and that amounts to 18.82%, and hence it's recognizing $20,000 change dollar for revenue. This is when, so different option principles we can leverage when the invoicing and the revenue recognitions can be done separately. If you want the revenue to be recognized immediately upon invoicing, then you can certainly use the no WIP option. Let's give you one account transaction for it. So use just one milestone, which is for $55,000. And when this was invoiced, let's see the posted transaction. Need an estimate because there's no WIP over here. Subject transaction, $55,000. Let's view the voucher. We should expect to be credited immediately and the AR to be debited. So we have our accounts receivable debited for the amount, and the same on account transaction where we had $55,000 is crediting on revenue. Options in the fixed price project, we that completes the demonstration in Dynamics AX. There is a lot that can be configured, and a lot of value can be obtained AX and overall using the project module. Our next session on details of using subscription revenue, using project module as well as the service management module, which is planned on August 17. We are ready for Q&A, and I'll be happy to share the knowledge on your questions. Request you if you could probably call out the questions. I'll certainly that will be helpful.
All right. Yeah. So please do enter your questions now. First one that we had was really just about getting access to this session after we finish the live event, and we are recording today's event, so that will be made available in the next few days here. A lot of questions right now. We can give folks one more minute. While we do that, I do want to remind everyone that we do have an evaluation that'll pop up as basically looks like a little survey after the event. We do really appreciate your feedback and and letting us know what you thought of today's event, both the WebEx environment and the presentation information. I'm not seeing any other information. Rahul, maybe if you have any contact information, feel free to share that, and folks can obviously follow up with me or with you with any questions that they think of later. There it is.
Yep. So I'll just
RealDynamics.com.
All about Real Dynamics, and I could speak on this email address at the top right, and I'll answer the questions offline as well.
What changes are planned to accommodate the new RevRec guidelines coming online in 2018?
I think it's a great question, but certainly we'll have to take more of Microsoft Proc team help as well as to how that can be leveraged. The essential part being what's the delta that is coming in terms of recognizing revenue with respect to what the solution has to offer. I don't have much information about the one that will come out in 2018, but something that will be I'll be doing it as well.
Okay. Well, let's see if we have another one here. How does AX handle pulling together fair value data?
Okay. So I think to an extent it does a great job. You can certainly leverage the completed percentage principle, but at the same time also leverage a good forecast in the system. So that way, once you are recognizing the cost in the right periods and the right time, and all the categories are marked which are supposed to be taken into accounting for the calculation of the percentage complete, you will certainly get the fair value price of the value to be recognized into revenue.
All right. Well, I think we will end it there. Rahul, thanks again for taking the time to present so much great information to us today.
Thank you so much.
Yeah, thank you to everyone. And I should mention, we do have a second session, right, Rahul? And there's actually a question. Will it cover the allocation of revenue into different revenue categories?
That session is mostly focusing on the subscription revenue, which is, when, as that's the modern day billing mechanism, you bill to the customer or you consume a subscription, and based upon that, the revenue has to be recognized. So that's functionality, and it's great, and it's certainly customers will benefit from that.
And that second session is Wednesday, August 17th at the same time.
Yep.
I'll end it there. Thanks, everyone, and have a great day.
Thanks.